A warm welcome back. I'm Sage. I hope you're enjoying your Friday afternoon. You are watching 𝐊𝐴N TV live from Sydney, and this is the Mid-Market Pulse. So let's get started with today's mid-market commentary. Today's top news: Biden tax spooks the investors and ASX trades flat at noon. Well, the market opened to a weak set of cues coming in from the global markets. However, the market has pared some of its losses and at noon trading above the market opening levels. 7 of 11 sectors are trading lower. By lunchtime, the benchmark index ASX 200 lost just 8.30 points and traded at 4,047. Continuing yesterday's momentum, AREIT once again remained the best performing sector, followed by telecommunications services and others. Consumer staples shares were under pressure and at the bottom of the winners and losers chart. While IT traded in the red, 2 shares from the sector, including Nuix Limited and Megaport Limited, traded higher. Megaport has added 4% gains, continuing on yesterday's bullish tone. And moving on, why are copper shares under pressure today? On Thursday, copper prices slipped on worries about China capping commodities prices to curb inflation and as investors locked in after a rally. Today, copper-focused Australian miners and explorers track metal prices lower. Oz Minerals sheds 3.6% to hit lowest since March 30th. Aries Resources and Castillo Copper declined over 2%. Sandfire Resources dipped approximately 2% to Australian $6.06. Australian energy stocks eye the worst week in nearly 3 months. Australia's energy sub-index AXEJ is all set for its highest weekly decline since the week ending on January 29th. The sub-index is on track for a weekly decline of more than 4%. The crude oil prices are under pressure on back of increasing concerns over reduced demand in India, the world's 3rd biggest oil importer, due to increasing COVID-19 cases in the country. Papua New Guinea-focused oil and gas explorer Oil Search eyes a weekly fall of more than 6%, and Woodside Petroleum, which is the top independent gas producer, is set to shed more than 5% for the period. Santos dipped by 3%. And now, an important news on the travel front. Australia is to limit flights from India. Australia has geared up to impose more stringent restrictions on international travel in the wake of rising coronavirus cases in some countries. Australia has planned to reduce flights from India as the latter continues to buckle under an unprecedented and a much severe second wave of COVID-19. COVID-19 cases in India are skyrocketing to a new high every single day, pushing the health infrastructure to the verge of collapse. The populous Asian country, India, reported a staggering 315 approximate thousand new cases on Wednesday. There has also been an uptick in the number of travellers returning to Australia who are testing COVID-19 positive. The National Cabinet, which met Thursday afternoon, has also decided to limit departure exemptions for travel to all high-risk nations, including India, allowing exemptions only in very urgent circumstances. Also, it has been made mandatory to pass a COVID-19 test as well for any traveller heading to Australia from any of the high-risk nations before departing. PM Scott Morrison said chartered and direct flights from India would soon be cut by 30% and departures to India would be limited, addressing the Cabinet meeting. Moving on to some important market updates. APAC shares under pressure as COVID-19 US LTCG woes weigh heavy. The shares across the Asia-Pacific or APAC region opened in red on Friday morning as sentiments were subdued due to the multiple global concerns. Australian benchmark index ASX 200 opened in the red and was trading 24 basis points or BPS lower at the time of filing this copy. The situation was no different in Japan, where benchmark Nikkei 225 was trading at a loss of 118 BPS. However, the New Zealand markets were muted as the country's benchmark NZX 50 was trading flat with gains of just 2 basis points. The Morgan Stanley Capital International's MSCI APAC index was trading at 205.34, which is 124 BPS, little past Australia's market opening. The reports about US President Joe Biden likely to double the long-term capital gains, or LTCG, on the wealthier strata have taken the sheen further away from global equities that were already lacklustre due to worsening COVID-19 situations. According to the reports, US President Joe Biden is working on legislation where wealthy individuals can end up paying capital gains tax of 39.6%. This, coupled with prevailing surcharges on the investment income, would shoot up the federal tax rates to 43.4% for the people earning more than US $1 million a year. The report came on the back of worsening COVID-19 situations in the world as daily new cases are nearing 1 million mark for the first time. As a result, all the major benchmarks in the US closed in the red. Dow 30 closed down 94 BPS, S&P closed down 92 BPS and the Nasdaq closed down 94 BPS. And now, let's quickly wrap up the market movers of the day. Beginning with, TPG Telecom Limited has secured holdings in all possible licences in the 26 𝐺HZ band auction for 108.2 million Australian dollars. Mobile JV Pty Ltd, the company's 100% owned subsidiary, has acquired 400 MHZ millimetre wave 5G licences for Perth, Melbourne and Sydney, and 600 MHZ licences for other metropolitan and regional areas, including Brisbane. The crucial acquisition will provide considerable boosted capacity to deliver superfast 5G mobile service and 5G fixed wireless services. TPG Telecom Chief Executive Officer Iñaki Berroeta highlighted that the auction result is positive for shareholders. TPG Telecom Limited shares were flat at Australian $5.79 apiece. Kogan.com Limited is advancing towards the mighty ape integration and handling challenges emerging due to the COVID-19 pandemic. Yet it continued achieving robust business growth in the first quarter of the calendar year. Kogan reported that the gross sales expanded by over 47%, revenue was up by over 65%, and adjusted EBITDA is dipped by over 24%, and the active customers reached 3,215,000, up by over 77%. Kogan is focused on improving customer experience and working for future growth by following its long-term strategy of investing in platform improvement, brand awareness, logistics ability and technology. In response to the skyrocketing demand witnessed during the first half of financial year 2021 period, the company landed inventory order. It aided the company in launching some exciting new products and achieving extremely strong levels of inventory. Kogan.com Limited shares declined by 9.704%. Ava Risk Group Limited released its third quarter financial year 2021 report today. The company reported net cash from operating activities of 3 million Australian dollars as compared to 1.1 million Australian dollars during the PCP. Cash receipts grew by 66% to 14.8 million Australian dollars in the third quarter of financial year 2021. Dividends of 4.4 million Australian dollars related to a special dividend of 2 CPS were paid on 10th of March 2021. Ava Risk Group maintains a robust financial position thanks to the consolidated net cash of 11.7 million Australian dollars with no debt. The company stated that though the pandemic has impacted certain areas of their operations, but also provided opportunities to offer more innovative solutions to the customers. Ava Risk Group Limited shares were unchanged at 0.47 Australian dollars. Thank you for your time watching. That's all for now. But do keep watching 𝐾𝐿 TV as we bring you the latest news and trending market updates live from Sydney. This is Sage signing off.